You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it's time once again for TWIFO. This Week in Futures Options, a program where we break down all the other fun stuff that's going on in the world of trading. Maybe some energy, maybe some ags, some equities, some metals. You never know what's going to make it on the round table, even though, spoiler alert, most of those will probably make it on today because things are actually happening out there. Of course, you guys can join us live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr. Get the podcast on your favorite platform of choice, including our app is a great place to get not just this show, but everything. And however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. What you want to see in our new drink we just came up with last show, the Stiff Vicks. You guys have your thoughts on that one. So have at it over there at Options. It's a place to do all that fun stuff. And joining me in the studio, it's a pleasure to see him in person for a change here, trying out our new setup. Mr. Sean Smith, the Managing Director of Derivatives Licensing. Easy for me to say. Over there at FTSE Russell. Sean, welcome back to the studio, sir. It has been too long.
Mark, it's great to see you. It's great to be back. Looking forward to today's show.
Yeah, should be a fun one indeed. And I think also joining us from parts unknown, let's find out, Mr. Nick Howard, the creator of Quick Strike. Mr. Nick, are you there, sir, and where are you beaming in from today?
I'm here in the world global headquarters of Bantix, and let me guess that Sebastian had something to do with that name of the drink, right?
How could you possibly guess that, sir?
Because it's offensive and juvenile. That's how I could guess it. So, just very typical. Surprised. I'm lucky I didn't hang up.
There you go. Yeah. Nick already making friends and winning friends and influencing people as the thing. So, well, listen, Nick, you haven't been on. You were actually on last week. Sean, you weren't on the last couple of weeks. I'll let you play. You play the spin the wheel. Where do you want to start this week, sir?
I want to talk about oil.
You want to talk about oil?
I hear you guys talk about oil.
Let's do it. Let's talk about oil then. We could do that, Mr. Nick. You got some crude in you today? You feeling crude enough?
Well, I know Sebastian's feeling crude.
See, I set you up. Wow. See, there you go. I set you up, and you deliver like clockwork. Nick is not, if not predictable. What is not predictable, though, out there is the crazy realm of all things crude coming into showtime here. WTI feeling the love again this week after kind of selling off last week. Now feeling a little bit of love, up 54 and a quarter coming into showtime. By the way, you guys can play along as always. CMEGroup.com/TWIFO, TWIFO. That's where you could see all the good stuff there for yourself, like we're looking right now. And of course, if you want to graduate to the big boy version, Bantix.com. That's BANTIX.com. Click on sign up for Quick Strike, get the big boy version, the Skew slide, all that cool stuff that's coming your way in the near future. And if you do that, you'll see all this good stuff, including the fact, like I said, we're up about nearly 3% on the week, which is pretty good. Yesterday, a decent 1.5% rally as well. A lot of this coming on the heel of Saudi Arabia's energy minister saying, again, they're going to stick to their cuts. Their production is going to fall below 10 million barrels a day in February. And then, of course, some info coming out of our stockpiles as well. All that combining for a little bit of a bullish. So crude's kind of a weird one. It's topsy-turvy. 1 week it's off. 1 week it's back up again. A little bit more action-packed than we've seen it of late. All this turbulence means, of course, the vol creeping up a little bit out there, seeing vol across the board, up multiple handles kind of across the board, depending on where you're looking here in the Quick Strike. And, of course, you got that fun shift slide. That's Nick's newest toy. I'll let him break that down for us in a little bit. Let's look here what was lighting up really quickly in good old WTI. Looks like the March contract, which is going out any second now, was dominating the tape this week. Nearly 40% of the paper going up this week was in that March contract. The double calls, 55 calls, leading the dance, 28,000 and change. Not surprising. That's pretty close to where we are right now here over in WTI. Also dominating the tape out here, going out a little bit farther out. Going out to April, we got the 45 puts with nearly 11,000 contracts out there and all sorts of other fun stuff. Mr. Nick, I don't want to bury the lead anymore. I know you're excited about it. Tell us what caught your eye in the land of crude, and then perhaps more importantly, what's going on with your new shifting and sliding, sir?
Okay, so are we on that? Are we on the self? You're on the auto mute now, right? I don't have to self mute anymore, or do I still have to self mute?
You can do whatever you like. I had you muted. If you don't want to, I can auto mute you too.
No. I'm saying, do you have the new technology?
We do. We have the new tech. I have it on. So if you're not talking, as long as you're not making a lot of crazy noise, it should be good.
Yeah, I was rustling a napkin, so I self-muted. So I want to make sure that that we're squared away. So let's see. Yeah, we as you mentioned, we're up almost 3%, and when we look at the volatility, right, we do have the new shift and slide. So basically, what we've been talking about over the course of the last several months is just how much is really a change in volatility and how much is associated with just moving strikes, right? So, for instance, right now we're looking at April, and we have the at-the-money volatility change of about 1.44, and of that, it's about 50-50, where 50% of that, or 0.72, is shift, and 0.72 of it is slide. So basically what we're saying is, because we moved higher in strike, we went down in volatility, so you know what the shape of the curve looks like then. So we see the slide along the curve. And then we also had a shift of about the same, 0.72, 0.73. So that means we have a real volatility loss as well. So not only did we and again, we sort of expect the vol to come off a little bit when, at least the way the vol curve is generally shaped. But we did have a real loss in volatility as well. So that's sort of the idea behind those two new measures, the shift and the slide. It's like a daddy-daughter line dance, so to speak. So we got that's kind of I just was there a couple weeks ago, so that's kind of where I came up with the names.
I think I said our vol was up, but obviously I was looking at that's the first column you've added there, which is the strike. So we've moved,
strike, right?
We've moved up on the strikes.
So
I meant to say, so Nick's throwing curveballs to me, but I'm rolling with them, listeners. They've changed things around. Obviously, we've up on the strike chain, but down on the vol, like what Nick's saying. Yes,
we did change a couple of the column orders, so I apologize for that. But now you know. So in any case, so we have a real loss in volatility on top of the movement along the vol curve. So I think that's gonna. I always was talking about it and always had a look at the vol curves. But now with the report itself, you can see that. Sort of visualize for yourself that you had movement in one direction and then down as well, in a whole parallel shift down in the volatility curve as well. And as far as the skew goes, as you might expect, the change in the richness of the puts and the cheapness of the calls is going to change a little bit when you're sliding along the volatility curve here. So not much change from last week. A little bit of a change from richness and cheapness, just based on movement, but really a skew, not all that exciting in terms of anything happening there. So really, what you're seeing is sort of like we talked about over the last few weeks as well, sort of intra range movement here. And a little bit of softness in that movement because of the fact that we do see a shift down in the vol curve.
Speaking of softness and volatility, where we're seeing a lot of softness in the vol these days, Mr. Nick and Mr. Sean is, of course, in the equity side of the space. It's kind of been an interesting time. We've seen maybe. It's kind of hard, too early to tell for sure. Maybe some conciliatory gestures on the trade war, maybe saying that March deadline, maybe we could let that slide a little bit, a little bit of softer rhetoric coming out of the different capitals there. Maybe that attempting to be a little bit more conciliatory, leading the markets to do a little bit of rally-ho out there. Even today, we started off with a bit of a sell-off. Now most of that kind of coming back in as the markets are kind of taking a second wind latter portion of the day. All of that combining to mean we're coming in on the vol side right now. Most of the major indices on the vol side off quite a bit since our last show. We're seeing VIX cash. Let's see, VIX cash at about 15 3/4 or so. So that's pretty much on from where it was about an hour or so ago in the old option block. And we're seeing the old Russell VIX, aka RVX, hovering a little bit north of a 17. So you're talking almost, not quite 1.5 points out there, which is actually pretty tight, Sean. It's been
quite a bit.
Yeah, it's we talked about that spread here quite a bit here on the show, and usually for the better part of the last month at least, it's kind of hovered in that 3.5 point range. These days, kind of coming in a little bit, and a lot of that volatility and that velocity of volatility is actually coming on the Russell side as opposed to the VIX side. Usually it's the other way around. Has that been something I know you've been kind of traveling hither and yon. Has that been something you've been picking up from people as you've been doing the road show out there?
Ebbs and tides, right? And the vol has come in quite a bit. At least the spread has come in quite a bit. We are monitoring all of this along with volumes in the options as well, both CBOE and CME products. On the future side, things couldn't be stronger and more global. As I think we've mentioned in the last couple of shows, there's been quite a pickup in volume from the European and Asian regions, as we've been talking about. So it's really exciting to see that diversification of client base.
Yeah, you've been saying the after hours volume has really been picking up. There in the after hours. Let me see if I can just turn you up a little bit so I can hear you fine. The live listeners telling me they can't hear you, Sean. Give me another test 1, 2, please, sir.
Test 1, 2.
That's a little better. I think that's
RVX.
All this fun new equipment means there's so many things to play with during the shows. It could be a little bit distracting.
It's like that Forrest Gump speech, and the mics go out, and I just missed the whole thing. So Sean probably had his Gump moment, and
you missed all that?
You missed all that, Nick? Oh, well, there you go.
All that.
He's just saying what a great guy Nick Howard is and how he hopes to aspire to
Howard,
be like
the Howard
someday.
family.
The whole Abby Hoffman, Forrest Gump speech in D.C. I missed it. Sean's moment.
Can you hear him now?
Can you hear me now?
I can, just like the Verizon and Sprint commercials.
You can't hear him. Okay. Yeah, all these fun levels to balance here. But you were just saying, Sean, you kind of been on a bit of a road show of late out there. What's been front and center in the equities realm for Russell these days?
Well, as you know, I think Nick likes to quote me every once in a while, buy puts when you can, not when you have to. Here we are with the
You certainly can now.
Yeah, exactly my point. So there's nothing wrong with protection of portfolios, and when vols come in like this, there's opportunity, right? So, not that I'm going to recommend any type of transaction, but definitely watch the spread between RVX and VIX. And I was also talking about volumes in the options and also in the futures, and the strength and the diversification of client base and its international distribution, trading much higher volumes out of Europe and Asia at this point in time. So just to repeat, so Nick gets a little flavor.
And just between you and me, there's nobody else listening. Even Nick, I'm going to mute him so he can't hear you. How are we looking on the RVX front? What's cooking there? Come on, give me a little inside scoop. Just me and you talking here, Sean.
RVX,
Yeah.
we have to continue to establish that client demand for that futures contract. And we'll get there. So I'm very excited about the product. I'm very excited about RVX as an index. But you got to capture that spread. You need to do it in the options.
Yeah, you got to sling. Unfortunately, you still got to sling. Maybe fortunately, depends on how you're looking at it. Let's look at those options.
Fortunately,
yeah,
exactly.
Let's look at those options, see how they were lighting it up this week out here in Russell land. Again, Russell up big over the course of this week, up about 40 handles, right around the 15.5 level is pretty much where you're at the money. As you mentioned before, vol coming in kind of across the board. Again, that cool new shifting and sliding. That's pretty cool. So I think we actually have a question about that a little bit later. So we'll get into more of that. And in terms of what was lighting it up out here, it actually looks like pretty far. Actually, yeah, puts were kind of the order of the day. 1370 puts out here in March, 1275 puts in Russell out here in, what is that? That's in the Feb, looks like the weeklies. So a lot of interesting put paper. Maybe people are listening to you, Sean. They're buying puts when they can, not when they have to out here in equity land. Let's look at a real quick look over here on the old E-mini S&P, see if it's a similar paper flow that we're seeing out here. Again, listeners, you can do all this for yourself, cmegroup.com/TWIFO or bandtix.com. Click on the drop down there, go to equities, then go to UX Index E-mini, and it's all there for you. Russell 2000, S&P 500, all that good stuff there in the E-mini that you guys like to sling. And it looks like there's a little bit of a different tail. Actually, no, I take that back. It's puts again in the E-mini S&P as well. The 2500 put as of showtime, we're at 27.5 in right about it in the S&P. So up about in the E-mini S&P up nearly 50 handles. 27.5 puts. How do you like that, Sean? Maybe people listening to you, they're trading their puts this week, even though we've seen predominantly upside lighting it up. So maybe they've taken your advice and getting their puts when they can, not when they have to, sir.
It's exciting to see, and as I said, this index, the small caps, has it takes those swings to the upside and to the downside, which is why there's usually a sharper skew. in the put options of Russell. But as the markets rally, again, vols come in. As we all know.
Yeah, it has been. Nick, I think this is a perfect example of why you kind of have your shift and slide tool as well. Because other products, let's say a metals or an ags, you're going to see that skew, shift and change. Whereas in equities, not so much, more sliding up and down the curve. Is that kind of what you're seeing here this week?
Yeah, I just tweeted a vol curve so you could get a good idea. And the equities is really the place that you can really measure it, like you just said. So in this case, we slid down. We went from puts to calls, right? And we've been talking about it long enough that we know that the shape of that curve is, kind of sliced from the top left to the bottom right. So we expect the volatility to go down, but then we have an actual vol increase, so that the shift is showing an increased level of volatility. So we had a rally, and vol came off, but real vol. I mean, I don't want to call it real vol. That's a trademark infringement on a product that hasn't come to market over 10 years. But
I'm going to say, yeah, Bob Kraus is going to be hitting you up. You're talking real vol.
I don't want to. I disclaimed it. So, or we're going to call this the quick shift vol, right? And the quick shift and quick slide. Those are trademarked. We're seeing an actual bid to the volatility. So yeah, this is a perfect example, because it's easy to look and say, oh, vol came off. Vol did come off because of the way you moved on the curve, but the reality is vol's bid, so I think it's going to be a helpful measure.
That's why we have these tools, listeners. Check it out for yourself. Like I mentioned many times already on the show, bandtix.com. Log in, get the big boy version so you could see these kind of cool shifting and sliding, because if you're trading these things, it's kind of helpful to see how you're doing on the old curve. Let's keep on rolling. Just judging by all your different feedback out here, you guys love certain components. Metals you like as well. Interesting stuff coming out of CME. Copper options. We were talking about copper and metals with Blue on the show recently in some of his research, and copper setting an all-time record about a week ago on the 6 out there with 37,175 OI out there in copper. And it's kind of been steadily growing pretty aggressively out there since pretty much Q2 of 2017. That's when, copper options, copper volume in general, pretty much a story of Chinese demand. You'd think maybe the lack of that demand would be causing a slowdown out there in all sorts of copper options, but at least so far, the numbers looking pretty robust out there in copper. Let's pull it up for ourselves and take a look, go into the quick strike, go into the metals, then the base metals, then choose copper. And let's see, again, copper not going to light it up as much as like a gold in terms of volume, listeners, but still informative on the paper side. Let's see what's going up this week. Copper kind of selling off a little bit, not a ton, coming into showtime, off about 1 1/3% net on the week. The lion's share of the paper, about 67% of it coming in, looks like the March contract with the 282, so that's 2.82 calls leading the dance out here, listener. So maybe a little bit of upside, maybe a little bit of giving up the ghost. Most of that, actually, 2 big trades, 150 on Tuesday, and nearly 400 today. So today, a big day for trading some 2.82 calls out there in copper. 290s also active out there in May as well, doing, nearly 400 as well. So smaller numbers than we're seeing in the big boys like the gold, but still interesting stuff. Speaking of the big boys, let's see what's going on out there really quickly as well. In gold, again, go to precious metals, choose the gold, listeners, and then you're off to the races. You could view it how you like. I like to look at all the expirations so I could kind of see everything at a glance, but it's a lot of data, so be prepared when you're doing that. We saw some interesting stuff coming on gold this week. We saw gold kind of selling off a little bit earlier in the week, then kind of recovering. We saw some economic data coming in today to kind of move gold. Now, net on the week, now we're seeing gold kind of unched. Right around that 13, 16 level, off slightly on the week, but not a ton. So all this kind of talk about gold, what's going on with gold in relation to the economy. We saw some weak U.S. retail sales and inflation data coming out of the Fed, all that combining to make gold effectively unched here on the week. The other story about gold is always a vol story. What's going on with gold? Can gold vol survive? Can it catch a bid and maintain that bid? Again, we were talking about that. That's a big area of research with Blue and Eric and their team over there at CME. And this week, at least, not so much. Gold vol coming in yet again, not a ton, slightly, Again, if you're looking at the vol section there, listeners, it's the middle strike is the at the money. That shows you the net movement on the at the money volatility, and it's come off about a third of a point, pretty much roughly across the board out here. Let's see what was lighting it up from an overall paper perspective out here. Looks like we're going back to March, and it's the even puts, the par put. 1,300 puts are leading the dance to the tune of just nearly 5,000, about 4,900 and change, lighting it up. The big trade going up yesterday, nearly half of that, nearly 2,500 going up yesterday, about 1,100 today, nearly 1,000 on Tuesday, and about 600 or so on Monday. So that's the big net about opening too. So about 1,000 or so net contracts open. Again, we don't have today's numbers, so we don't know for sure. Not surprising. We're flirting with that even 1,300 level, seeing maybe some near-term hedging around that even level. Not exactly surprising paper. Let's see if anything else really was going on of note in that contract. Also, 13 quarters, nearly 4,000 for number 2 in gold. So 1,300, 13 quarter strangle, lighting it up in March in gold. Not exactly unforeseeable paper. Let's go a little bit farther out, see if we see anything a little bit weirder. Oh, yeah, and we do. Let's go all the way out to, what is this, March of next year, to the 1,500 calls, lighting it up 2,500 times. Here, there we go. All of that on Wednesday. All of that opening. Looks like the 1,300 calls went up on Wednesday as well. 500 times. That's also opening. So maybe, I don't know, Mr. Nick, does this have the feel of a 1x5 to you, or is this kind of just unrelated paper? And anything else catching your eye out here? Could be in gold or maybe copper or any other metals catching your eye this week, Mr. Nick.
Well, I'll mention the copper in that, like we talk about in terms of getting spoiled by some of the more active products and their volumes and open interest on a regular basis. The copper doesn't have a tremendous amount of OI, but it is increasing, and it's increasing fairly steadily. So even if it's going 2 or 3%, it's starting to have some good activity. I know there's a lot more coverage. I know I have more customers asking for the historical data. So I feel like there's probably some likelihood that there's going to be even a further increase in that OI and then that trade volume. As far as the gold goes, we're talking about how vol's down, but we got to look at those real numbers too, where we see under 8% in the front contract, but we'll discount that because that's March. But still, 11 days, a low volatility. I mean, that's a pretty cheap at the money that you're talking about. Then you go out to the 40-day contract, we're looking at 8.6%. And if I go out and I look 3 years back, we haven't, the only time cheaper has been back in Christmas time of 2017. So we really are starting to approach some lows in the volatility. So we saw a bid in the vol as the market ran up. And then as we sort of steadied out, they took the, what out of it. Saying, okay, we're not running much past where we, our support over at like 1340 or whatever it was, 1330, and it took everything out of the volatility. So we are on lows again. So I think it's time you got to really start to pay attention of what those levels are, see how the futures are moving, and then maybe look for some opportunity where these vols might get to them again. If we saw a move down, we would probably get a bump back up, and for sure, if we saw a move up, we're gonna. So this is sort of one of those. We're not quite shaped. They took a lot out of the calls in terms of how expensive they are to the at the money over the last week alone, and the puts got a little bit less cheap. So it's not quite balanced yet, but I think that are going to be more apt to see a bid on a down move than we will on the up move, even though we got a bid on the up move the last time through.
Speaking of up moves, and that's not what we're seeing, ironically, out here in soybeans. Let's shift to the ags really quickly. Even though I mentioned there were some conciliatory talks on the trade front, even Steven Mnuchin, the Treasury Secretary, coming out saying the talks were progressing well. Of course, I mentioned Trump saying they might push that March 1st deadline. All that you'd think would be a fairly bullish scenario for the soybeans. Soybeans, of course, have been effectively ground zero for the trade war since it all began. And yet we're seeing the beans kind of take a little bit of a break this week, off about 1%. Maybe they were baking in more optimism than they're getting. Either way, a little bit of relaxing, not a ton. We're still north of that 900 level everybody's watching, right around the 905, 906 level out there strike-wise. Volatility, also kind of a bit of a mixed bag. Most of them off slightly. Some of the structures getting bit up a little bit. You know, the seasonal dance that happens out there with the term structure of products like the beans. Let's see what was lighting it up out here this week. 42% of the paper going up this week in that March contract, and where the action was near-term upside, listeners, to the tune of the 920s. Again, we're at about 905, 906 in the at-the-money right now, so a little bit out of the money there. 920s doing about 10,000, nearly 10,500, about a third of that, 3,500 coming today, and that's the biggest day of the week, actually. The rest of the week, 2,200 on Tuesday, nearly 3,000 on Monday, and slightly biased towards opening, but again, we don't have today's numbers to know for sure. And if you're saying to yourself, what about the 900 puts, the par puts? They think that would be active. They are, but they're number 2. 9,800 there again, also out there in March, with about 3,000 again lighting it up today. So today, a pretty active day out there for the beans. The big day, though, was Tuesday for the puts, 4,000 of those. Net of that closing. So maybe some closing paper going up this week on the 900 puts, which is kind of interesting. Maybe there was a lot of hedging. Now that we're coming down towards it, maybe taking some of that off the table. Seems like 900 puts are kind of a popular strike across the board. Also saw those trading out there in, what is that, April of these 900 puts, doing 6,000 of those as well. Even 880 puts going up a little bit farther out there in the May contract. So seems like a lot of puts are the order of the day, even though the number one trade this week is going to be the 920 calls out here in the beans. Let's just look a little bit farther afield, see if we see anything strange or weird. Yeah, 1,200 calls going up out here in Nov of 2019 to the tune of not quite 2,000, about 1,600 of those. So those fairly out of the money. About not quite 300 handles, but close to it out there, out of the money. So interesting stuff out there. Again, you know, get a little bit farther out. So that future is about 950, so about 250 out of the money out there. Still interesting stuff, Actually, before we get that really quickly, since we're talking ags, the hogs. You guys always love your hog love. That's also under the ags tab over there in Quick Strike. Just go instead to the livestock section, and you'll see those. And lean hog's been actually lighting it up in January. We kind of touched on it when we looked at the overall numbers, but CME liking to tout their hog love themselves this week with looking at the numbers for January. And lean hog options were crushing it. ADV of just a little bit north of 12,000 contracts. That's a 75% increase from Jan of 2018. So, Mr. Nick, a lot of things popping off in Agland. We got beans, maybe not feeling the love some people thought, and then also your old friend Hog Love making a surprise resurgence. What was catching your eye this week out here from an ags perspective, sir?
My comment about the lean hogs is that I don't know that I can comment. I don't get the market so much, and there's so much that goes into it. And I gotta credit those guys that do trade it, because it just seems like you know, maybe the hours are short on those products because there's such a bear to follow, and there's so much going on that I don't know. I don't have much to say there because I really don't know what's supposed to happen. So I'm not much help there.
Mr. Nick, I turned to you for all...
Should have stayed muted.
You should have stayed muted. I turned to you for all my hog love, sir. That's where I go. I call up.
I love the hogs, but I have no hog love. We got to get a hog.
We do. We got to find the one guy who trades this thing up and bring him on, because you're right. It's kind of a bit of an impenetrable morass to me as well. And it's just...
drag him away from the newspaper. They used to be in the pit.
Yeah.
I'd be able to get him on.
His newspaper and his chain smoking, and get him on the show to talk a little bit. Here we are, just throwing stereotypes left and right here. I can see Sean just wincing at yes.
I'm red.
He gets very red.
I'm getting redder.
Let's see if we can calm Sean down with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
There you go. You know, we're talking, Sean and I talking in the break, all about hogs. The hog love is strong here. Like, clearly strong with you guys, too. Let's see what you guys have on your brain, though. Your questions, your comments. Looks like Caesar L, following up. We talked about this a little bit with Blue a couple of weeks ago about palladium. You guys have been writing in with questions about palladium. Caesar L asking what a lot of you are asking. Why is palladium catching such a bid? Why is it worth more than gold again? We kind of mentioned this, like I said, when Blue was on. People making a lot of hay about when palladium hit that 1,300 level, starting to surpass gold for the first time. I forgot how long it was, if it was a year or two or a decade, however long it's been. But quite some time since palladium has hit that level. People want to know why. Again, we talked about the driver back then. A lot of it is the catalytic converters. About 80%. Exactly. Yeah, 80% of the use in palladium is coming in the catalytic converters, and so that's still where we're seeing a lot of areas, developing world like China and others, trying to finally cut down on some of their pollution. Big demand for those. Also, the fact that, supply and demand. It's still a pretty scarce product. Only a few places really get it. Russia, Montana, ironically, of places, and a few others, and South Africa. So there's not a lot of it out there. In fact, a lot of it is becoming more of a recycling story, getting the old uses and recycling it again. So kind of a 1-2 punch, scarcity and still some demand. We'll see if that maybe continues. Maybe that's why it weakened a little bit. The Chinese demand is the big story, and we didn't see that out there maybe of late. So interesting stuff out there. But yeah, that's pretty much in a nutshell. Let's look really quickly and see. And we looked when we had Blue on a few weeks ago. Palladium, not exactly the rock'em sock'em robots of all options trading. Again, you can find it for yourselves, listeners. Go into precious metals and then go down to palladium. And let's see, I'm seeing a whopping 28 contracts on the tape this week, listeners. And we're hovering right around, actually well north of 1,300 now. Looks like we got threatening 1,400, 1,393, up 22 handles on the week in palladium. And if you're saying what's trading, looks like 1,300 calls, so roughly 100 handle in the money calls in the front month in the March contract. So yeah, Nick, palladium not exactly a big option story, which is why we don't talk about it on the show that much. But the underlying has been moving quite a bit. If this was a pure precious metals future show, we probably would be talking about it. But not so much on the options. Mr. Nick, you got any people hitting you up about palladium over there at Quick Strike? I want to see the full palladium. I want to see all 28 of these contracts in their full glory.
No, not too much there. I think the most interesting comment I could make about that is that you have the ability to trade those spreads at the CME. They have the gold silver contract. They might have the gold. I don't know if they have the gold. They might have the gold palladium, but they have those metal spreads. So if you really want to play in that area, there are futures there for you to do that. So you don't have to worry about the liquidity of the palladium product.
Yeah, the futures are there, obviously, for our purposes. The options, not so much. If you want to trade them up, have at it. Let us know what your experience is out there. But yeah, it has been moving. Just not a lot of paper going with it, at least on the options side. All right, Sean, I guess this one's for you. I guess you're the Russell guy. This comes from Model X. Model X, maybe he drives a Model X. Maybe he's Model 10. I don't know. He says, ask the Russell guy. So that's you. That
would be me.
Yes. Which of the Russell products, his name is Sean, by the way, for future reference, which of the Russell products puts up the most contracts? Also, looks like this part's for Nick. Also, when's the move shift stuff coming? Let's start with the Russell stuff first, Sean. You could do the full family. I mean, he doesn't really specify. So if you're talking underlying, it's a ton. He's saying contracts. So I'm assuming he means your bailiwick, the derivatives. I'm
sure he means one futures, two options, right? Yeah. So you can get that entire package at CME Group where you can have Russell. The symbol's RTY. Very liquid futures contract, liquid options contracts. The only other home is CBOE, where you have extremely liquid Russell options as well, where there's tight bid ask. It's a large notional contract, which is good bang for your buck as well. So you got two places: CBOE for RUT options, the symbol's RUT, and you've got RTY at CME Group.
Yeah, those are kind of the primary places to go. That's where the mothership, you're getting the actual index. I'm sure he's probably wondering, too, people always look at like the ETPs and that whole universe out there. That's not really your domain, and that's not what we talk about here on the show. We talk about the futures options there. Those put up some numbers, too. But the primary ones, obviously, what we're seeing over here on and the options are growing. They put out that number. I forgot the exact growth rate. Maybe you have it off the top of your head, Sean. Put you on the spot. I don't know, but I know the OI was up some substantial percentage, pretty much year over year. Correct?
Open interest in the options or the futures?
Yes. I'll take both.
Both tremendous open interest. We're at over 500,000 contracts of open interest at CME Group, and CBOE's open interest is just under 400,000 contracts. So quite an anchor of open interest there.
And Nick, the second part looks like it's for you. This guy wants to know, or lady wants to know, when's the move shift stuff coming? That's in the dev right now, right? Has that made it out to Quick Strike proper yet?
No, it is out there.
It is
out.
Okay.
Cool. CMEgroup.com/TWIO or TWIFO. And it's there. And we'll talk more at the end of the show about how you can get access to the click version too. So, ready to go and out there. I'm looking at the prod version right now with all those numbers.
Okay, cool. I know it was in dev like the last time we talked.
Yeah,
so
this last
out
week,
there.
I think.
Perfect.
Yeah.
Oh, so there you go. I'm not sure when this question came in, but there you go, Mr. or Mrs. Model X. Wherever you could find your Quick Strike, that you could find the cool moving, shifting, sliding stuff, which is fun stuff. Let's see. I'll let Mr. Nick pick because I'm feeling charitable. Any of these jumping off the page at you? We got so many, Mr. Nick. Anything really resonate with you?
Let me pull up. Where are you? There you are. Sorry, got buried as I was.
Brent WTI spread. We got flavors of volatility.
Russell open interest thing for everybody.
You got more WTI versus USO, FX, all kinds of stuff. Seasonal ags.
Wait, I want another one that references Sean as the Russell guy. Are any more of those?
No, unfortunately not. But we could do another one that mentions kind of volatility, and maybe we'll see if we can. Let's see if we can turn Sean red face again. That'll be our goal here.
I'm red. Just get redder.
You're getting redder. Okay. Let's see. Okay. Let's do this one here then from Studio 64. I like the handle. That's a good one. You guys are both handle fans here. So
Studio 64 instead of 54. These tricky.
Oh, yeah, you're right. That's a 54, wasn't it? I'm guessing 54 probably was taken. So this guy's trying to be a little bit clever here and go 1 up, 10 better. He wants to know, Sean, what? Oh.
Stud is over 64.
We could have a whole separate segment of just reading into handles here on the show. What is meant? We'll do all of it for you. We'll break down your handle and your license plate. It's a twofer here for free on the TWIFO program. You guys love you guys do like the word puzzles? You do like the jumble? Is that like your thing?
Absolutely. I'm a big word puzzle guy.
All right. So that's
Sean. When you mentioned it, I told you I was cracking up because I do the same thing all the time, and I think I said before, my dad used to spell everything backwards, so I just got in the habit of doing all that.
Oh, that's hilarious.
And the other thing, I always look for the math in the all number plates to see if you get any kind of system between the first two numbers. Yeah, I'll do that as well. So anyway, that's fun for me.
Let's go on a road trip. We can have fun together with some plates.
Yeah, it'll go by quickly.
He was taking your place on the show last week,
and we'll play some slug bug.
Just breaking down handles all day. So the man loves his handles.
Handle show.
Let's see what Studio 64 loves. They say, why don't we see more flavors of equity volatility? There's VIX and then there's Eurostoxx, and that's pretty much it. There was talk of more on the horizon, but nothing has come of it yet. I'd like more underlying indices other than the S&P and more methodology, maybe more than just the base VIX methodology. Puts in parentheses, maybe some sort of Skew product. Thoughts? There's a lot to unpack there. We just mentioned one earlier on the show when Nick jokingly mentioned the real vol. We have seen a lot of people tilting at that windmill of trying to get more volatility products out in the ecosystem. It's a challenging thing. You're having to get the underlying and everything else like that. You mentioned VIX, you mentioned Eurostoxx, and you're right. There are more, as we're talking right now, there's a new version about to hit, which is the spikes coming out of MIAX. That's more S&P though. That's on the SPY, and using a similar methodology. So it's more products, which you'll be happy about, but not really entirely different methodology. Yeah, and not really entirely different underlying. This goes back to what we were saying before, Sean. When are we going to get RVX? When are we going to get maybe, I'm sure you guys have these conversations internally. Again, it's just
Absolutely.
me. It's just me and you talking. No one else is
just
listening.
us.
You know, I'm sure that you see areas that are interesting and ripe for opportunity in the volatility space. Maybe 10,000 foot here for our friend. You don't have to give away the kitchen sink, but for our friend Stud in 64, whatever Nick said he was. What are you guys thinking internally about the opportunities in the volatility space when it comes to Russell?
Well, let's talk about product at our partners exchanges, and I don't want to speak for our partners exchanges too much, but the launch of derivatives products has become extremely scientific, and there's a tremendous equation of which a large part of that equation is client demand for the product, right? So CME and CBOE have both become extremely successful in launching new product because their success rate of product has gone from, I want to say, from a 5% ratio, 5% success rate to north of 80%, based on the scientific research they do prior to launching a product. And not only that, but their outreach in terms of selling the product has just become a tremendous success as well. So our partner exchanges that want to launch these types of products will really do a deep dive in research into what will work best and solve the most problems for clients. So, and as that demand appears, product appears. CBOE launched the RVX. Client demand is there. It's coming back. The RVX product is on the future side will be back. Timing is one of those questions. But again, I think I've mentioned this name before. Call Rick Rosenthal. He is the man that needs to hear the client demand in this product, and he's at CBOE. And if you guys send me a note, smith@FTSERussell.com, I'd be happy to forward your request on to him.
Yeah, he was going to be with us on the show today. Obviously, other things intervened. He couldn't join us today in the studio. We'll have to get him on one of these days.
He was going to be here
Yeah, he was supposed
today.
to be here today to talk about what. So we would have had more direct answers to your questions there, Stud in 64 or whatever. I forgot what Nick. The Stud is over.
Stud is
What'd you
over
call him, Nick?
64.
Stud is over 64.
Stud, I'm over 64.
Nick taking it to the blue place all the time. You're just like you and Sebastian, two peas in a pod there.
No. I was talking about an older guy who's fit here.
I see. All right.
That's my motivation. That I'm closer to 64 than I am to 24. So.
But Sean, you're right though. It's a weird space. We've seen so many products and indices launch and get thrown out there that you think would resonate with the populace, and for whatever reason they don't. I remember a few years ago when Apple was dominating the tape and it was pushing 700. All anybody wanted to trade was Apple. They had the notion of single name VIXs with Apple and SPY and others and gold. And none of them, Gold VIX, another one, gold volatility. I think that would trade like hotcakes. It didn't light it up. So the volatility space is weird in terms of things that you think would resonate don't, and then things that you don't do. When they first launched a product based on the at-the-money volatility of the S&P 500, I thought this is the most institutional product I've ever heard of in my life. This is going to be a layoff pit for S&P options traders, and that's it. And then it's become a huge retail success. So these things are sometimes fluid, I think is an easy way to put it. I don't know, Mr. Nick, do you have any thoughts on why we haven't seen? I think this idea of a Skew product would be cool too. There is the Skew index now, but that's not tradable, unfortunately. It's just one of these watchable indexes. Mr. Nick, do you have any thoughts here for your friend who's an older but still sounds like very attractive man?
Oh yes, for Stud, I'm over 64. Yes.
The options are so liquid, you still get the bang for your buck trade in the liquid options.
Yeah.
So,
you can still trade the underlying, obviously, and you can make it happen yourself. But he wants it nice and packaged. I understand where he's coming from.
I do too, and that's why the indexes actually exist, right? So,
Mr. Nick, any thoughts on U.S.
Yeah, well, no, I think that I think there's probably some that would work that are kind of caught up between licensing and that type of thing, right? You would think that there should be an active rate one as well, and there's not. So I don't know. I personally, I know that everybody watches the VIX. I don't watch it all that much, and from a volatility index standpoint, I always like to try to think that we could do something. You would think you could do one. Isn't there? Didn't there used to be like a corn VIX and wasn't there like an ag a commodity?
I know there's a gold and obviously a gold and a crude. I don't know if there was ever a corn one. I'll have to check.
Well, there was a I thought there was a commodity one, but you would think that would be good too, right? Because I mean that's pretty much you get your pick of the litter from an entire asset class. But I don't know. I just think at some point stuff just gets a little bit. There's too much. I don't know. I don't know if that's the reasoning, and how much can the exchanges launch these new products, and some of them sit around and languish for years and years, and then all of a sudden they're good, and then some go away. I'm not sure what the answer is. I would think that people smarter than me are thinking about it all the time, so they must know why they don't launch more of them.
Well, since you're so smart, Mr. Nick, I'll let you. We have time for one more. I'll let you pick what you want to go out on. You want to go on spreads, FX? You want to go out on just some general love for the show? What's floating your boat here, sir?
Let's see.
Which handle resonates to you the most? I should ask you. Probably that's probably the best question.
Well, the handle that resonates the most, but I don't want to answer the question, is F rank. And question from F rank, and but I didn't read the article, so
F rank.
That's a code name.
F rank. He wants to do.
I'm not sure what is Brandon. Let's see what B ran Don.
Oh, Brandon Elliot.
Have any good rule? You got read from Brandon.
You want to do this one seasonal? Okay. Brandon Elliot. He wants to know: do you guys have any good rules of thumb when trading the term structure in seasonal products like corn? Maybe a point when the spreads are just too wide or narrow and need to be traded. What's the typical holding period for these trades? Longer than a month? Thanks for answering. This is an interesting one. Nick, since you chose this one, I will allow you to have at it, sir. What resonated with you in the seasonal term structure of ag products, or in seasonal products in general?
Well, I would think that before you do start trading those, and one thing that's interesting, and you can go out, I've been tweeting some stuff about macro hedged, and they talked about some seasonality stuff, or at least some spring roll stuff in crude as an example. But from an ag standpoint, my main comment on this would be that since you have so availability of so much data, volatility, price action, all that kind of thing, that before you start making any trades in the term structure in regard to seasonality, take a look and see what it's done historically, because I think a lot. That's why they talk about seasonality, because there are some sort of natural movements to the vol and to the price. But as far as any good rules of thumb, since I don't trade them, I don't have. My rule of thumb would be look and see what's happened historically, and then see if you find anything that's related in that way. But the only season, I don't trade too many seasonal things. Only my season tickets, my Bear season tickets, I'll trade those every once in a while, but that's about it.
All right, listeners. That music, unfortunately, means we've come to the end. Yeah, that's a good one. I want to save that one, actually. I'm going to mark it here because I want to save that one for when we get some guys who are trading the ags, like maybe the Acuna guys or others we've had on, who go deep into the ags on a regular basis. Because Nick and I, we don't trade a lot of the ags, so we're talking about the time frame for when to put on these spreads and stuff. We'll get some people on who sling those on a regular basis to see kind of what the setups are. I mean, obviously there's certain months that are bid and offered from a new crop, old crop, and all that kind of thing from a volatility perspective, so it makes it intriguing from that perspective. But other than that, let's see here as we're getting on. Let me just that music. We'll make sure we can hear everybody over there. There we go. That's a little better. All right, as we're getting on, Mr. Nick, since we're talking all sorts of good stuff, you wanted to hit on your sliding and shifting and shaking. When I guess all that stuff's live now. Where can people go check it out, sir?
Well, first of all, I feel like I'm at a nightclub because I could barely hear you. So the DJ's got to turn the music down. Can you hear me now? I can't hear you, Mark.
Yeah, I hear you fine. Go ahead.
Oh, you can hear me now. Okay, yeah, because when you were talking, I don't know if you were talking to Sean or if you were talking, you wanted to be heard over the music, but I couldn't hear you over the music. So, so just as an FYI, yes, we've been mentioning it for a while. Where we don't push Quick Strike subscription too much on the show because I just feel like it's not the forum. But I'm going to push these two things. You can now do single tool purchases, and the reason I even mention here is because one of them is TWIFO. So that will be available at the end of the month. You'll be able to get access to a live TWIFO, everything that we're talking about, with links, with updated vol throughout the day, intraday volume, OI, the curves, the historicals, the vol skew comparisons, the shift and slide, all that kind of stuff. That'll be available at the end of the month. And I will say out there, it's going to be annual subscription, $300 and full access. And then the same thing's going to happen with the spread builder, which I think Quick Strike has one of the best spread building tools out there for futures options. So stay tuned and take a look and see what comes of that.
All right, everybody, check it out for yourselves. You know where to go, cmegroup.com/TWIFO for the intro version. You want to get up to the big boy version, bandtix.com. That's BANTIX.com, or Quickstrike, QUIKSTRIKE.net for the big boy version. Speaking of big boy stuff, Sean, you're out there doing interesting stuff on the old road shows. What's coming up in the land of FTSE Russell from a derivatives perspective, sir?
Just keep your eyes on those early morning European hours and the late Asian hours for trading opportunities in Russell futures. That's one. Number two, again, Rick Rosenthal, RVX. You know, there's a lot of R's there. Rick Rosenthal, RVX. I really client demand will help us there. So I'm looking forward to more discussion on those two spreads and the ability to trade those spreads, whether it be in the options or hopefully in the futures again at a future date.
Hit the man up or hit up Sean S. Smith at FTSERussell.com. He'll forward it on to the appropriate folks. Again, the more they hear about this stuff, the more they'll want to list it themselves. You guys keep asking us. We can only forward you stuff on along for so long. We got to get it to the right people, and then they'll get it out there. Then you too can be like, what was it, Stud in 64 or whatever the handle was, who wanted to trade a variety of different equity volatility products. I feel you. I hear you. There's more coming, hopefully, and in the near term, we'll be seeing that. And of course, while you're checking all this stuff out, we had Blue on recently, and Eric, you like their research and the other stuff they have going on. Check it out. CMEgroup.com is the place to go for all that good stuff. And on behalf of Sean and Nick and our friends at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you guys do. Keep it coming, and we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.